Right, so yesterday we got the FOMC minutes coming out, and there was a little bit of movement in the market, and I thought that it was quite cool. I was reading the FOMC halfway through, and then I kind of fell asleep. It was kind of boring because everything was actually as expected. We expected Jerome Powell to talk about the 50 basis point hike for the next couple of FOMC meeting, which kind of already baked into the price of it. We are expecting higher inflation to be coming. No, they are expecting inflation to kind of peak, and they are expecting more interest rate to come in to actually bring inflation lower. Which is why, the Nasdaq and the S&P 500 definitely love the fact that the FOMC meeting actually brought some form of a bullish catalyst of some sort. Okay, even though when they were talking about how they are most likely going to be increasing by 100 basis point, at least 100 basis point hike in the next 2 to 3 meetings. Okay, having that alone usually would scare the market a little bit, but that wasn't really the case because, like I said before, in the FOMC meeting on its own, Jerome Powell basically already explained to us what they're actually doing, and this is to kind of front load inflation, to get rid of inflation as soon as they can. So, like I said before, I really think that this would be a better idea for them to just strike it hard, strike the inflation hard, raise all the interest rates that you want, and do it in a short period of time. Okay, and even if it does scare the market, shock us into a recession, who cares? Okay, they shock us into a recession, and then afterwards they can just lower the rates afterwards. It doesn't really matter. Okay, I think that I'm not going towards the whole Paul Volcker era sort of thing where they were having a 16%. It's not as if they were having 16% inflation and then we went like 17% interest rate. I don't think that would make sense. However, I do think that if you want to really try to offload inflation as fast as you can, just increase it by 100 basis point. Okay, you increase it by 100 basis point and see how the market actually reacts to it. Okay, because the moment the market reacts to it and say that like, oh, okay, since the market thinks that 100 basis point is way too high, the market just get into a recession. Okay, we'll see S&P basically drop to about 320 or 300 for the SPY, and then you'll see QQQ, which is Nasdaq, drop all the way to about 240, 230 or so, and then basically we entered the recessionary era. Okay, and when that happened, basically you can just be like, okay, you know what? Let's just cut down our interest rate down by another 200 basis point, get back down to a base neutral rate of about 1.5% or 1.25% or even 1%. Okay, and when you actually bring it down, afterwards, if your Fed base rate is down to about 1%, mortgage rate is going to go down. Your lending rate is going to go down. So bank rate is going to go down. Mortgage rate is going to go down. That means housing demand is going to eventually just go back up, and businesses is going to continue to go back up. That's basically how you just get out of it. Okay, and the only reason why the Feds are not doing this is because they don't want to go through the recession part. Okay, they don't want to get a harsh landing and then recover from the harsh landing. They want the whole prevention is better than cure. However, I don't think that a prevention is better than cure is going to be working for this current inflation thing. But of course, according to the FOMC minutes that they actually went through yesterday, they were just basically saying that it is possible for them to get a softish landing according to Jerome Powell, and that's kind of where they are going to be going for. All right, anyway, that's the FOMC out of the way. Stocks future looking good. SPY is up about almost 1% right now. Nasdaq is up almost 0.5%. And all the other tech stocks doing relatively well. Okay, now let's cover some news today. All right, so let's let me just bring up my screen over here. There you go. Okay, let's look at Broadcom. Okay, Broadcom deciding to buy VMware for $61 billion. The company to assume VMware's $8 billion debt load. So this is brand new news. It came out like, I don't know, a few minutes ago. Broadcom agreed to buy VMware in a cash and stock deal valued at $61 billion. Under the term, Broadcom will assume their $8 billion debt load, and then they'll rebrand and operate under the VMware banner. Cool. Okay, next up. Stocks future Edge Hub ahead of tech earnings. Okay, this is going to be huge. Okay, we got Alibaba reporting their earnings. Okay, Alibaba reported their earnings. I think it was last hour, and according to the price action that's moving on Alibaba, let me just check on Baba. Where is Baba? Where is Alibaba? Okay, Alibaba is up 4.3% in the pre-market. Okay, so pretty cool. They did get higher. They got higher not because they beat on estimate. I'm pretty sure they had a better outlook for their next quarter, which is why they actually went up by a little bit. All right, so let's look at the futures news. Stocks swung this week, fluctuating between daily gains and losses as investors considered the Federal Reserve next monetary tightening moves to combat inflation and how much they would weigh on growth and market. Minutes released on Wednesday by the Fed showed that policymakers were in agreement for a half percentage point increase in June and July in line with previous communication. This is what I talked about. Okay, to some extent, markets have been reassured that the Fed isn't going to tighten more aggressively than what is expected, but sentiment in the market remains rather stressed. There's still a lot of uncertainty about what will happen if inflation stays high. Let's see. Do we have anything interesting? Okay, in pre-market, Nvidia declined 5% despite posting record revenue as its sales outlook for the current quarter came in below the estimates. Retailer Williams Sonoma climbed 7% after posting profit that beat analysts. Macy's jumped 15% after raising full-year earning guidance. Okay, so this is pretty cool. Okay, because if Macy's going up, okay, it kind of brings some form of you don't have to worry about the market as much as because with Walmart, when their inventory basically went up by 32%, and for Target, their inventory went up by 41%, it was actually some form of a huge stress in the entire market when your consumer discretionary and your consumer staples are getting so frothed up and inventories are almost to 50%. Okay, these are the companies that usually inventories should not go anything above 15% to begin with. Walmart usually on average quarters or average months, they should not have more than 8% of their inventory. Okay, and for them to actually post for their latest quarter earning to have 32% of their inventory was absolutely mental. And let's not forget, exactly a year ago, exactly 2 years ago, exactly a year ago, we were having supply chain issues. We were worried that the inventories were not enough. We were worried that the shelves were not enough. So actually, this comes back to Cathie Wood's theory that inventory is going to be a very, very short-term problem. And that seems to be true because you can see it very, very clearly that all this consumer discretionary, the consumer staples, inventory are all back again. Okay, and the only reason why Macy's jumped is not because their inventory is low or anything. It was because their full year earnings guidance went up. Okay, and that's going to be opening up a lot more possibilities for consumer discretionary and staples to do a lot better in the coming quarters. All right, let's see what does CNBC have for me. Macy's Twitter. Oh, okay, cool. We can talk about Twitter in a bit as well. I'm not sure if I have the Twitter stocks, the Twitter news here. Let's see if I can find the Twitter news on the thingamajig. There's also Apple news as well. I actually want to go through the Apple news as well. Macy's posts strong sales growth and raises earning outlook. That was crazy. This is the one. All right, Elon Musk plans to rely more heavily on equity for Twitter deal. Funding plan now includes $33.5 billion in equity, up from $27.25 billion. Okay, so Elon Musk funding plan now includes $33.5 billion. No longer plans to rely on a margin loan backed by shares of his electric vehicle company, which are down by a third since Twitter accepted his bid in late April. All right, so what does this actually mean? Okay, so back when Elon Musk wanted to buy Twitter, okay, and they were going through how would the payment actually worked out for Elon Musk. He was doing a margin loan on the basis that because he is the CEO of Tesla, of a very, very successful listed company, a public company, he was able to actually have some form of a margin loan that uses the amount of shares that he have in the company as collateral. Okay, so right now what he's basically doing is that he is not going to be on margin loan anymore because he don't have to worry about Tesla at all. Okay, and it's kind of the same as how we are, both of us, or for all of us actually investing in the stocks market. And if you have a margin account, you're basically just borrowing money. Okay, what Elon Musk is basically doing is he's just borrowing money using his Tesla shares. Okay, and what people were really worried about is that if Tesla shares price were to plummet, okay, the deal might not go through, and it will. If that doesn't go through, this is gonna cause Tesla to go down even more, and that was the main concern for the entire market, especially around Tesla. Okay, and because right now with this margin loan completely just off, okay, we don't have to care about the whole margin loan using Tesla shares as collateral. Elon Musk basically just single-handedly brought back Tesla shares. Tesla went up 5% in the intraday yesterday, and then right now in the pre-market, he's up almost 2%. Okay, so pretty good. We actually saw Tesla go all the way to about 620. Okay, and it was a little bit worrying. Okay, but of course, right now Tesla is coming back to the 670 region again. So very interesting to see what's going to be happening. All right, so afterwards, we're working through this transaction process. Even as we work towards closing this transaction, our team and I remain focused on the important work we do every day. Okay, and I don't think that because even though what Elon Musk is doing, because Elon Musk, he kind of concretized that he's going to be buying Twitter no matter what. Well, not no matter what, but he's actually putting his foot forward and say that, I'm working towards getting the acquisition for Twitter. However, the main question still stands, which is how many bots is actually using Twitter, and I don't think we have any answers to that, either by Parag Agrawal or by Elon's team either. So I think that's going to still be an issue that we're going to be seeing in the near future as well. All right, so definitely because of this, Twitter shares rose more than 5%. Also, this 5%, let's be honest here, Twitter going up in price slightly comes from two different catalysts. Okay, the first, Twitter going down in price actually comes from two catalysts, and this basically is just one catalyst. The reason why Twitter dropped in price was two catalysts. First of all, was Elon Musk basically saying, oh, you know what, the bots might be an issue. That might be one of the reasons why I don't get Twitter. That was the first bearish catalyst. The second one was actually coming from Snapchat, when Snapchat basically came out with a profit warning, saying that, oh, you know what, we were guiding for $0 to $50 million profit for the next quarter. And 1 month in there, like, you know what, we're not hitting it. It's impossible for us to hit it. It's so far away that it's impossible for us to hit it. And then Evan Spilger basically just came out and just like, oh, you know what, we're gonna give out a profit warning, and that basically just scared the market. Okay, and Twitter definitely took a little bit of a hit. If Twitter is not in between the whole deal between Elon Musk acquiring Twitter at all, I can assure you Twitter would easily drop 20% from that news as well. So, yeah. All right, let's move on to the next news. All right, Apple boosting pay budget for workers amid tight labor market. Pretty cool. Okay, the iPhone maker faces store unionization attempts, higher inflation. Okay, so honestly, there's nothing much for me to really talk about this, because I think that Apple wanting to pay more in order for them to keep the workers, in order for them to not move over to the unions and such, I think it was the right move. But something that I do want to talk about Apple that actually was reported by Bloomberg, which is something huge. Okay, Apple to keep iPhone production flat as market grows tougher. Companies aiming for about 220 million units this year. Android rivals from China have suffered a tough first quarter. Okay, Apple is planning to keep iPhone production roughly flat in 2022. Conservative stance as the year turns increasingly challenging for the smartphone industry. The company is asking suppliers to assemble roughly 220 million iPhones, about the same as last year, according to people familiar with its projection. Okay, first of all, huge red flag for Apple. The moment you say that, it's about the same as last year, it means that you are not improving. And a lot of people invest into Apple, expecting Apple to be a big tech company, but at the same time, relatively growing company. Okay, we still expect some level of growth for Apple. And if we are talking about its flagship iPhone series, okay, if you're not having any growth on those numbers, that's definitely going to be a huge red flag for iPhone, or well, Apple investors in general. Okay, let's see. Market forecasts have hovered closer to 240 million units, driven by an expected major update to the iPhone in the fall. But the mobile industry has gotten off to a difficult start to the year, and production estimates are down across the board. The worst inflation in decades, the war in Ukraine, and supply chain turmoil all threatened to weigh on sales in 2022. Okay, downgrade. Okay, a lot of downgrades happening. Apple already warned that supply problems will impact sales by $4 billion to $8 billion in the current quarter, largely because COVID-19 lockdowns are rolling production lines in China. I've talked about this so many times, okay? This is definitely going to be a huge issue, okay? Especially if China continues with their zero COVID policy, okay? If they keep on doing a zero COVID policy, trying to catch that 10, 20, 100 COVID cases every single day, and then by doing so, they have to lock down the whole entire city, especially if they lock down important capitals, well, important cities such as your Beijing, your Shanghai, Shenzhen, all these various provinces. If they were to lock them down, okay, they're going to be causing huge issues for the entire supply chain in the world. Okay, so with the whole tech industry bracing for a slowdown in consumer spending as rising fuel and material prices push up the cost of everyday essentials. The overall smartphone market got off to a rough start of the year, with shipments dropping 11% in the first quarter, the worst fall since the pandemic began 2 years ago. Xiaomi, the world's third biggest smartphone maker behind Apple and Samsung, posted its first ever quarterly revenue decline this month. Okay, so it's not just Apple, okay, and it's probably not Samsung either, even Xiaomi as well. Okay, if a lot of the smartphone industry people are starting to post quarterly revenue decline, okay, it's definitely going to be shown as some form of a red flag. And of course, this actually comes with two different worries. The first one is definitely with your supply chain issues. Okay, China, without a doubt, okay, without a shadow of a doubt, China is one of the biggest contributor to the supply chain in the world, be it for the chip manufacturing, in every sector actually, so it doesn't really matter. Okay, huge supply chain contributor, and with them going through the whole zero COVID stuff, having lockdowns over and over again, that's definitely going to be affecting the decline in smartphone. Second issue that I really have is the demand for smartphones, the demand for newer phones, the newer models, the newer iPads, the newer watches, the newer AirPods, the newer iPads. I don't care. The demand, basically consumer discretionary, coming back to that again, okay, the consumer discretionary, currently the demand for it is not as high. Okay, maybe in the past we would use our iPhone, for example, we'll use it for a month, and then not a month, we'll use it for a year. Afterwards, we will start to think, you know what, maybe I want to change my phone in the next few months. Okay, and then you buy a new phone. Okay, you just buy the next model, you buy the latest model, you buy another phone. Okay, and Apple will make the profit. Cool. Okay, but right now people are basically thinking, you know what, I bought this phone and I've used it for 2 years, and I think that I can actually stretch it to 3 years. Okay, and with more people having the same mindset as that, okay, that's basically going to be shrinking the amount of iPhones that's going to be sold every single year or every single quarter by Apple. And that's definitely going to be very, very challenging. And especially for a company like Apple, okay, that I wouldn't want to say they are monopolizing it either, because at the same time, we do have Samsung, we do have Xiaomi as well. But I do think that the entire smartphone industry is so saturated that you cannot have any new players come in. Any new player come in, they have to lose a lot of money on R&D, and they cannot afford it. They cannot afford to go up against Apple, Samsung, and Xiaomi. Even Xiaomi is not really doing that good of a job. And the only reason why they even have good quarterly revenues is also because of China. It's because they're sold in China, and they basically have this whole, well, I don't want to call it agenda, but they do have this so-called patriotism around the brand itself, and they actually just get into Xiaomi. All right, so that's my worry for Apple. Apple is betting on resilient demand for its device due to its comparatively wealthier customer base and the strength of its software and services ecosystem fueling sales of hardware. It's also seeing less competition now that fierce rival Huawei has been shut off out of market. Huawei was the number one phone maker by shipments, have seen revenue fall for 6 consecutive quarters. That's what I mean. That's what I mean. So yeah, I do think that that's gonna be very very worrisome for Apple without a doubt. Okay, for people who are still diehard fan for Apple, I'm just letting you know there are so many red flags. Okay, right now Apple. Let me just look at Apple. Apple right now is down 1.2% in the pre-market, and I can see Apple actually going even down even more in the very near future. Right now, Apple doing $138, and I actually had a price target for Apple of about 165 for me to sell. And then I think Apple did hit about 162, 163. But my buy target for Apple was about like 110 or 115, somewhere along those lines. Those were also the levels that I bought into. So yeah, clearly you can see for Apple, the chart just basically went all the way up and then all the way down. Now we're back to the 2021 starting of 2021, those levels again for Apple. So yeah, definitely, even for Apple, okay, you're not talking about your growth stock, your tech stock, you're talking about big tech, okay. Apple easily, they are considered a consumer discretionary, but I would easily like put them alongside with the staples because that's how important Apple is. And even then, they're not really doing that well either. So yeah, those are my concerns. All right, next up, UN corrects China on human rights chief. Actual words to see. The state media said Bachelet praised human rights progress. UN said she stressed need to make liberties core of securities. Issued a clarification of his human rights chief's remark during a call with President Xi Jinping. In an apparent suggestion, Chinese state media mischaracterized her comments. In response to widely reported remarks attributed to High Commissioner Bachelet, please find a link to her actual opening remarks at her meeting with the President of China. Shortly after the video call held earlier today, broadcaster issued a readout saying Bachelet had told Xi that she admired the efforts and achievement China has made in areas of poverty elimination, human rights protection. In contrast, development peace, that human rights must be at the core of development, peace, and securities. China had a crucial role to play within multilateral institutions on issues such as inequality. The excerpt contained nothing that could be construed as praising China's human rights achievement. The UN didn't reply to a request for more information about the apparent discrepancy between the two sides' accounts. When asked about discrepancy Thursday at a regular press briefing in Beijing, referred reporters to the ministry statement on the call, which mirrored CCTV's readout. So yeah, basically just China just basically talking as if like, I'm not gonna lie, do you know what China actually sounds like right now? China sounds a little bit like North Korea. I'm not gonna lie. You can kind of see a little bit of a resemblance there. Okay, so I do think it's a little bit funny for that. All right, and let's move to the next one. Singapore. Li warns against isolating China after Biden's visit. Our country leader, Lee Hsien Loong. Okay, Singapore's Prime Minister, Lee Hsien Loong, urged that China remain integrated in the region days after US President Joe Biden visited Asia for a series of summits that excluded the world's second largest economy. If US-China relations continue on this path, it will lead to further bifurcation of technology and splitting of supply chains, or even worse, unintended consequences. And this is why I said that I truly, truly respect our country leaders. I do think that, because if you are from Singapore and, you basically would probably think that Singapore likes to play both sides of the stick. Okay, we are very, very good at that. And we don't make enemies. That's kind of like the perk of Singapore. We don't make enemies, and we make friends with everyone equally. We are a trade hub. We are just good. We are just friendly with everyone. Okay. And what I realized about our leaders are that they really knows how to. They really know the correct stance to take. For example, right here, Lee Hsien Loong basically said, if the US and China were to have anything, if they will have any sort of a conflict to happen, okay, technology is not going to be growing as fast because let's be honest here, the US and China, both of them are the largest economy basically, and these two largest economy are also the ones that's helping to further the research of technology. We do not want technology growth to slow down or worse, stagnate. Okay. Secondly, splitting of supply chains. Same thing. Back in Trump's era, okay, we had the whole trade deal with China, and you can really realize how big was the supply chain surrounding US and China. So of course, splitting of the supply chains, impossible. Okay, I cannot even think about it because that would just destroy the whole world. And then lastly, unintended consequences, and I'm pretty sure he meant geopolitical tensions, and I don't want to talk too much about that. Okay, so next up, he said that it's far better that China's economy be integrated into the region than for it to operate on its own by a different sets of rules. And yeah, I totally agree with that. Which is why, man, my leader, my country's leader, I'm telling you, if China were to be left alone, it's going to be even worse. And let's be honest, China do not want to be left alone either, but they can be left alone. Okay, and if they were to be left alone, remember my remark about being in North Korea? it's gonna come true. It's gonna come true. But yeah, it's better for China's economy to be integrated into the region than for it to operate on its own by a different set of rules. Very, very smart. It's true, because the thing is that China can definitely operate on its own with a different set of rules, but they're not doing so because they want to grow as an economy as fast as they can. And right now, because if China is in recession as we speak, okay, it's not smart for China to do so as well. But if what US is trying to do is further shun China away from all the other region, that's going to be very, very bad for both sides of the dice. So yeah. All right. Anyway, let's move on to the next news. I don't want to hold this up for too long. Futures max as trader weigh Fed's China outlook market wrap. I think I already explained about this. Let's move on. Macy's stock surge as company raises 2022 profit outlook despite uncertain retail landscape. So I was talking about this as well. Retail landscape, I think, is a very, very huge deal. Okay, we were worried about it, especially with Walmart and Target. Okay, and afterwards we have like your Bed Bath and Beyond, we have your Best Buy, we have Costco, we have Dollar Tree, we have the Dollar Store General and such. All of them, we are very, very worried about all of their earnings as well, because when you see Walmart and Target to have this kind of inventory, you would kind of imagine that all of them are going to be affected similarly. Okay, so you can see Macy's on Thursday reported fiscal first quarter profits and sales ahead of analysts' expectation. The department store chain, which also owned Bloomingdale's, reaffirmed its fiscal 2022 sales outlook and raised its profit guidance, expecting stronger credit card revenue for the remainder of the year. Okay, pretty cool. I do think that Macy's is not a staples; they are a discretionary, so it would make sense for them to have slightly higher margins as compared to Walmart. But at the same time, I was expecting Macy's to be destroyed alongside with Target. So, ultimately, still pretty good news. I don't wish for anything worse than that. All right. So next news. Oh well, the last news actually. Russia's central bank cut the key interest rate to 11%, citing decreased stability risk. Following an extraordinary meeting, policymakers opted for another 300 basis point cut. Is the bank third since an emergency hike of the key rate from 9.5% to 20% in the immediate aftermath of Russia's invasion of Ukraine and the imposition of punitive sanctions by Western powers. All right, so you can basically tell from here, okay, policymakers opted for another 300 basis point cut. Okay, this is what I'm talking about. For example, if US is going to be put in the same state, if US basically say that, we're going to be raising our rates just like what Russia did, okay, just bring it up all the way, okay. Well, for Russia, it's kind of extreme. Okay, Russia went all the way to 20%. I don't think, there's no way US need to go all the way to 20%. But US, you can just go up by 100 basis point, you can go up by 200 basis point, and afterwards you can have a 50 basis point cut, 100 basis point cut, or even a 200, 300 basis point cut. It doesn't really matter. So yeah, we can basically see what's happening with Russia and how they are controlling it. Okay, and you don't expect the government body or the Federal Reserve in Russia to be idiots. Okay, they are all very, very educated. They know the correct thing to do, and clearly for them, cutting rates makes sense. Okay, it's the same thing, forcing a recession and then afterwards cutting rates. Just saying. Okay, but yeah, they're just talking about how they're going to be cutting it from 14% down to 11%. So yeah, pretty much it for the Russian side of things. But anyway, that's all I have for today's news. Pretty interesting. And yeah, I think that's all I have for today's news. I do have a video coming out on Saturday. Today's Thursday, so tomorrow I'll be going through weekly trades and news. Okay, actually, you know what? Tomorrow I'm not going to be going through weekly trades simply because I did not buy anything. I did not sell anything. Yeah, I did not buy or sell anything actually. So I'm chilling. Okay. So tomorrow I'm gonna go through the news, and on Saturday, I'll be coming out with a new video. Kind of looking forward to that. A little bit interesting on my side. But yeah, that's all I have for today's news. Thank you so much for watching, and